Good morning, everyone, and welcome to the On Time, On Target Morning Brief. It is so good to be back with you all after what seems like forever. We had Friday off for Good Friday. Hopefully, everybody had a fantastic Easter weekend. And then, of course, I was out of town for volleyball for one of my daughters. And then there was just no way yesterday. We were staying with family in an apartment. So a bunch of us in an apartment, and there was no way to escape at all to be able to get out and do the morning brief yesterday morning. So that's why I canceled. Sorry for the late notice on that. But back at it for the rest of this week, and then going forward, everything is fine. We don't have another travel out of town, or out of Texas, I should say. We don't have another flying event until I think June, actually. Or actually late May for volleyball. So should be good on a regular schedule for now. So what we're going to talk about today is long-term investing strategy. And the reason I want to bring this up today is because we're hitting new highs, right? We had Friday off, but we had a fantastic jobs number. And well, fantastic is relative, sure. We still have employment up around 6%, but gosh, compared to where we thought we would be at the end of a pandemic, we're still in the pandemic, technically. So, there's a lot of things to consider. I think 6 is pretty good. Obviously empathizing with those that are out there that are struggling to find work, but as a nation, pretty healthier than we thought we would be. That, and combined with, of course, we have the stimulus, and then we have the infrastructure bill, which we talked about headwind or tailwinds with stimulus, tailwinds with infrastructure bill, and then headwinds later in the year due to taxes. So the question becomes is what to do when the market's hitting all-time highs. Well, markets that hit all-time highs tend to continue to make highs. The Dow and the S&P were at highs yesterday. NASDAQ's 2 point something, I think it was 2.6 away from recovering. It was in correction, a week ago? It seems like it was just maybe 2 weeks ago. It was in a full correction. And so not all the stocks have recovered, but many of them have. So the question becomes, do I sell here? Well, we're going to talk about that today. There's certainly times you trim, especially if you have an outsized position or something has doubled. But generally, just the market hitting new highs is no reason to move out of a position. For those of you that I do manage your money, you'll see I do not make a lot of moves. If you have 1,000 shares of something, I might sell 100 shares. When we get sort of toppy, even knowing that a downturn, you don't know anything, no crystal ball, but even having a pretty good sense that a downturn's coming, there are certain long-term names that you're just going to hold through these things. If you're having an outsized position or you're getting RSUs because you work for Home Depot, yeah, good time to sell. Same thing with GoDaddy. Yes, there's times to take certainly outsized positions and trim them back to normal size. But that's what we're going to talk about today. We're going to talk about what is an investment thesis, which is you need to have for your longer term holds, and what's a buy and hold strategy. I mean, obviously it's kind of obvious in the name of it, but to execute a buy and hold, does that mean you buy and hold everything? I will let you know. If you're catching us on replay, thank you so much for checking us out. Make sure you hit subscribe and the notification bell so you get these when they go live every day. Excuse me. If you want to join us in the room, $25 a month, just a little bit to come on in and ask me any questions you want. I've got a Q&A window and a chat window off to the left. Howdy, Daytona. Thanks for the shout out this morning. And with that, let's go ahead and get started. Welcome back, everyone. I just hit the chat up again for a couple of folks that just came in with what we're going to look at for longs and shorts today. But welcome back. Make sure you have your chat window set up correctly and your Q&A window set up. Standard disclaimer applies. This is a financial education presentation. You have to do your due diligence for acting upon anything you hear this morning. And you can read the full disclaimer information at ototnow.com. I need to wake up, get the Monday morning brain going, and it's already Tuesday. All right, here we are, April 6th. Make sure that's correct. Yeah, it is. All right, mission objectives: grow our money, protect our money, and live off our money. Well, the topic of the day, like I said in the open, is what do you do at all-time highs? I mean, yeah, slap high fives and maybe buy yourself, a steak dinner or something, because sure, the numbers are back to where you haven't seen them before for most people. So yeah, things are going great. But is it time to sell here? And I'm going to show you some charts, and that's really going to be our thought piece for the day. Of anytime you've made a decision to sell on some of the names we're going to talk about, which are down below: Facebook, Microsoft, Apple, Palantir, Home Depot, JP Morgan, and Target. Also, Roblox is in there as well. Anytime you've sold these, not Palantir and Roblox are too new, but pretty much every time you sold any of those other names, it's been, looking back, a mistake, right? Because if you still have them, they're all hitting all-time highs, except for Apple's off a little bit. But Luckin is not in there. You are correct. Luckin has already hit some highs and then dropped way, 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 way down the ride from 50 to 2. But if you're picking best of breed, which there's no way you could say Luckin is, right? Pretty speculative. Long-term, multi-decade names, which you don't know what they are at the beginning, but I will make the case that that's where we are with Palantir and Target, or Palantir and Roblox, and I'll show you some charts. The questions of the day is, what's an investment thesis? So basically, when somebody asks me, some pitches a stock, say, hey, check out Waste Management. I'm like, all right, what's your thesis? Generally, the dial tone, and they don't want to bother having a thesis. They just want me to do a bunch of work to look at the stock, which I don't do unless somebody says a reason why. But it's why you want to own this stock. And when they say it's undervalued, I'm like, okay, that's not a thesis. They're best of breed. They have high margins. There's got to be something more than it's undervalued. A lot of things are undervalued. Interesting thought piece for you, which I need to probably move for another day, is somebody was talking about the best investing books ever. And it came across one of the, arguably the best, Benjamin Graham's The Intelligent Investor. And a guy on Twitter said, that book has cost me at least $500,000. And I was like, that's kind of interesting. But really, when you look back at what Benjamin Graham was saying, you would never invest in technology ever if you followed the principles set forth in that book, which has obviously been a 20+ year mistake for anybody that's investing. Right. So it's kind of interesting how one of the tomes, if you will, of investing is really terrible advice right now. Right. So anyhow, just a thought piece. I thought that was interesting. Yeah, I stayed out of Amazon forever because they weren't profitable, because businesses are supposed to be profitable. Well, I understand it a little deeper now. And lastly, what's a buy and hold strategy? I'm not a buy and hold kind of guy, but once I have my thesis out there, unless the thesis changes, I'm only selling to adjust position size. That's it. Larger than that, I'm holding. If I can hold for decades, I will. And obviously, it's tax season, so there's tax implications when you start making moves in a taxable portfolio. All right, flow, long, short, open, short, long, all of that is standard. We kind of talked about that. Contingencies and academic resources are standard as well. Let's go take a look at CNBC.com. Actually, let's look at TD Ameritrade first and see where we are. Here's our setup for the trading. MUDs, MUDS long, Illumina long, and EBON short, if you're interested. And then I have the rest in the chat room. I don't know why Credit Suisse isn't selling off from being hammered for the past hour on TV, but it's not. Whatever. I'm keeping an eye on it short today. Here's where we are in the market. We look at this every day. Again, this is a 9-month look at the S&P 500, and guess what? Bing, new all-time highs. Yep. We were here, and oh my gosh, the world was ending here, and we left the bottom of, the world was ending here, and now it's not ending anymore. So that's why you don't want to go completely numb to this stuff, but until there's a significant move down, go on about your day. Do you, right? Work, play, whatever that is, family time, vacation. Go on about your life until something significant happens in the market. But made a bunch of money in the past 5 days or so. Here's the 5-day look. Yeah, boom. Yeah, we're selling off a little bit this morning. I still think we see an up market today just because new highs make new highs. It's what they do. All right, let's go to the headlines real quick and check out the futures, which are in the red, but not much. We'll see what goes on throughout the day. That is not what I want to share. This one is the one I want to share. Get rid of that. Okay, here we are with the futures barely in the red, and the Nasdaq's almost green. Look around the world, bright green in Europe, mixed in Asia. There's our numbers from yesterday. Again, the Nasdaq up 1.67, pretty significant. Bonds below the 1.7. You know, inflation, is it dead? No. Is it a concern? Yes, but we do not need to freak out about it every waking moment unless you watch Fox News. Then that's the storyline, and it probably will be for, I don't know, 3.85 more years is the inflation and spending storyline. But in the real world, it's not quite the case. Oil's in the range. That's looking good. I still think gold and silver are somewhat attractive here. So if you think about, well, what do I buy if everything's at an all-time high? Do I buy more Home Depot here? No. But what you can is you can load up on things like the BXX, some hedges out there, some gold, some Bitcoin, some silver if you want. There's other things to buy out there instead of just buying stocks at all-time highs. Bitcoin up around 58.5, gonna touch 60 here soon. I am quite convinced. Okay, let's take a look. Credit Suisse, ticker CS. No idea why it's not selling off from C-suite quitting, billions of dollars scandals. I mean, what more could you want out of a short headline than every single short bingo? I mean, out of these, 12 words? Yeah, but whatever. I don't know why it's not selling off, but we're gonna take a look at it. All right, let's see. Tesla stock worth 150. That's probably an upgrade. Again, I've said it's worth about 100. Even though Elon Musk, he said Austin plus this weekend over Twitter, 10,000 jobs here in Austin. He's very positive about all of this. Baylor won last night easily. Thump Gonzaga, I didn't see that coming. But again, they beat Houston by like 22. So it's kind of good for them. All right, let's take a look at some charts. Okay, Facebook, you know my story from way back in the day. I bought it. You know, you had the IPO. It IPO'd in the mid-20s. It jumped up to 40, above 40. All the movie stars were slapping high fives. It dropped down to into the 16s. I said 15 is when I was going to buy. I couldn't wait. I jumped in at 17. Popped up to 33. I sold it all because it was a double. I bought it all back an hour later when Zuckerberg on the conference call was talking about changing the world with all kinds of stuff he's doing. Bought it back at 34. And anytime you sold between 34 and 309 has been a mistake, right? Unless you're just trimming your position because you have too much. But again, best advertising company in the world. You can argue that if you want. You can go ethical on it if you want. Don't care about any of that. They print money, right? Microsoft. So here's what I wanted to show you about Microsoft is now these are split adjusted numbers. That's why these people didn't buy it in 86 for zero. They bought it for whatever it was. But when stocks split, they reverse all this and adjust it. Now, here is why isn't this showing up? There we go. You know, here's the crash of 2000. So, oh my gosh, say you were a genius and the day before the big crash, you sold all your Microsoft. Well, good on you. You sold it and then it came in, and say you're like, well, you know, I never really liked it again. And, you know, and then all of a sudden you missed this, right? You were out. Where if you just held it, so what? Yeah, it looked red there for a while, but so what, right? Apple, same thing, split adjusted. Anybody who bought shares for the first 20 years of the company basically got them for less than a dime, right? With all the splits that they've done. And same thing, look at this. Even though Apple got a downgrade this morning, I am not worried. It is Apple. What I wanted to show you these charts is when you look at like Palantir, we have next to no information about Palantir and how it relates publicly. So bear with me when I say that we bought it at $10, maybe we added more at 11, maybe you bought some up here. You can certainly buy some now. So what? If this follows, if that is the new oil, which is the thesis, And if this is the leading company out there, best of breed, which it is, and margins, high margins, big contracts, government and civilian. I mean, it's got everything you could ever want out of a company. When this stock starts going up, they're going to split it. And every time they do a 4-for-1 split, well, your $10 a share just now is like an entry price of $250. It splits twice in the next 20 years. You basically got these stock almost free, right? So that's what you're holding this for. CRM, I don't know. I want to say I think so, but I don't know. But Palantir, I am pretty convinced, and Roblox, the same thing, pretty convinced. It's just too early to tell. You have to hold these. CRM has been an amazing stock. Obviously, it's come in, but things change, right? So you want to, if you leave these names, you're probably coming back to them at some time. But I would say CRM's a second tier compared to some of the names I've thrown out there for now. All right, I did want to show you real quick that the Schwab chart. So here's Facebook's chart. These are all like 18-month charts. Home Depot is another one. You can't sell it here. I mean, you could trim, or if you have RSUs, yeah, you got to sell it here and turn it to cash and diversify. But other than that, you just hold. It's not probably going higher from here. It's probably going lower. Don't get fancy with it. Same thing with JP Morgan and Target hitting off all-time highs. Roblox and Palantir we've talked about enough. All right, so that's my long-term investing. Let's switch into short-term mode. Going back over to TD Ameritrade, I've got two longs and shorts for you. Good morning, everyone. Welcome to the On Time, On Target play of the day. You have four screens in front of you. You have make sure I'm on the right screen here, share this out. You have SPY on the left, which is the S&P 500 on a 1-minute chart. We're about even. And then you have two longs, MUDs and Illumina, and then a short with EBON, which is eBang, which is a crypto miner, which has already dropped 20%. So we got to find another short there. We like the 5 to 10% zone. So MUDs is, if you're a baseball card collector from back in the day, it's a SPAC, special purpose acquisition company, and it bought it's taking Topps. If you remember, Topps is one of the baseball card makers. It was Topps, and I'm blanking on the other one. Put it in the chat if you can think of it. And then but going public. The real money here is not in baseball cards, okay? It's in that NFT, the non-fungible tokens, the collectibles. All of that market Topps is into that, so that's the real money maker here. So we'll take a look at that. Illumina, they guided up, and they were low volume, so we got to make sure the volume's in. Probably not even at 100,000 yet. They beat earnings and guided up, so they're set up pretty nice to go long. Note the price point here, though. You're going to look at a $4 plus type R unit if you get into that. Okay. And then lastly, EBON is eBang. This is a crypto miner that is coming out and getting heavily shorted. So we're going to switch away from EBON because it's already dropped too far and see what's going on with why isn't this name selling off? I am so confused by this. Just getting crushed in the headlines. So I can't quite just say take it because, I mean, it should be dropping like a rock. It doesn't fit our criteria, the 5 to 10% down, so we're not going to take it. But it's pretty compelling, I'm telling you. And then the other one, short CEMI, there was absolutely no headline to go with this other than it has, let's go back to chart out, because I did look at it. So it went from 360 up here into the sixes yesterday, and it's just kind of selling off from that. So not a real good short thesis to work with there either. So don't really like any of the shorts. As far as our longs, MUD's kind of trading sideways here, not really moving. And then Illumina, okay, we set the low of the day at 415, so 415.50. So really 419.50 would be our long, which we're at. I'm not ready to take it here because I'm doing some math in my head. Say it's 420, because then I can do the math. We would have to get up to 432, which would be, yeah, that's not a bad thing. We'll see if this holds. We may be taking this long. I would wait till 420 for for the math, and then we just go to 416 for the R unit, but holding off on that for now. All right, let's look at some other longs out there because there were a couple more. RMO, which is Romeo Power, they have a partnership, a supply chain partnership with PACCAR, which is right down the road. Literally, I lived within a mile of the PACCAR company and had some friends that worked there in Mississippi. So supply chain agreement, they're up already 10%, kind of out of our window. So I don't know, not really finding anything I like here. Another smaller player that we'll take a look at real quick is APTX on a potential dementia treatment, and they are not moving. So I'm not going to take them there. All right. MUDs is starting to get some love. The market's starting to get some love. I don't see a trade in here that I like, so let's bail on the trades and start looking at the longer term stuff. Excuse me. Okay. Let's and we can come back to some of the longer term investments. Let's look around what's going on out there. TQLB is a penny stock. Let's see. Twitter got an upgrade today. Twitter's chart, I mean, it seems like Twitter just always goes up. I'm a user of Twitter now, and I just don't. Their advertising, it's not really an advertising. It's a get entertained. It's kind of like TikTok. There are ads, but you know them the second you see them, and you're gone, right? So you spend no time looking at ads. Unlike Facebook, yeah, I think they really present their ads a lot better. Maybe you scroll right by them, but I generally tend to at least look at the ads on there. Airlines getting some love this morning along with the cruise lines. There's Luckin in the green, the powerhouse that is Luckin. PPTY, again, that's another place to put money when the market is toppy, if you will. That's real property. Got the Roblox jumping around in here, barely in the green. DraftKings, another strong thesis out there for the long run. All right, clean energy. So I wrote down this morning, somebody had asked me, it's like, what are your three major themes right now with the infrastructure bill? Well, it's grid, GRID, clean, which is clean energy, and then 5G, which is NXTG. Those are the three things that I'm buying hand over fist for new money that's coming into the market right now. KWeb, I'm also buying if the folks have the stomach for a little more risk, and they're patient. If they're trying to make money in the next month, well, then I'm not going to buy KWeb. I don't know when that's going to pay off, but it's going to pay off. All right, Mind Medicine down, Clickstream down. That's a penny stock. Sony, that's down. Sony switched their ticker, which is weird, from SNE to actual Sony. I thought I had not seen that, where a major name had switched their ticker like that. MasterCard and Visa down. There's Palantir down. Not really worried about it. Okay. All right. Let's go back and talk about some buy and hold strategies. So first of all, let me talk to you about that investment thesis. We're going to switch over to this screen. Okay. So when you buy a stock, or if somebody, pitches a stock to me, it's just like, okay, what's the thesis? It's like, why are you buying it? So Apple, best in breed, sure, high margin, highly addictive product, buybacks almost continually. Those are things that I would be looking for of an explanation. I would not be looking at somebody telling me that it's 10% off of its highs or 90% off of its highs. That in itself doesn't mean anything. When you get into all the ratios out there, PE ratio is your best, I think. Dividend is literally irrelevant. It's not irrelevant if you're living off dividends, you're 70 plus or retired early and you need the income. You're holding it for a different story then. You're not holding it for total return. But if you're holding something for total return, i.e. the dividend plus the capital appreciation or depreciation if it goes down, then the dividend's irrelevant. If anything, dividend's kind of a drag on a company that's growing, right? Because it's an expense. It's right off the balance sheet, or P&L as an expense that they got to pay out. So the thesis comes first. And then once you have a thesis, and if your thesis is, like Kathy Wood's thesis with Tesla is strong, autonomous vehicles all over the place, single car ownership is going to go by the wayside, and Teslas are going to be running around like the public transit system. Okay. I don't buy that whatsoever. But she does, and that's why she put a $3,000 price target on Tesla. And I would have to say, if she's right, then yeah, she's probably in the ballpark of where Tesla stock will be, because that'll be huge. I just don't think any of that's going to come true. And if it does, it'll be Apple and it won't be Tesla, but we'll see. I have a 100% wrong scorecard with Tesla, so maybe I continue to add to that. But once you have a thesis, you don't sell unless the thesis changes. Let's go back to Luckin or Iqui or any of the other Chinese names. So if you hold those, they're higher risk, so you're going to get compensated for that risk. But that also means they have big moves to the downside. When you got Luckin and they started coming out with fraud charges and the books are cooked, well, the stock went from 50 to below $1. Right, so that's going to happen. The thesis changes when you start hearing things like fraud. If you are Credit Suisse is the best bank / financial institution out there, I think your thesis should have been challenged this morning or this weekend from all the events that are coming out of that. Wells Fargo, same thing. You can't hold it, right? Too much bad blood. IBM can't hold it. I mean, it's just can't because there's no thesis anymore. So if the thesis changes, you need to sell. If it doesn't change, generally you're holding it. So that's why you generally hold these positions through everything. So what is buy and hold strategy? So kind of transition to the buy and hold. A true buy and holder is an acquirer, not necessarily an investor. An investor is going to make both buying and selling decisions. Buy and hold folks, and I'm not saying anything bad about this. If anything, they make the decisions a lot easier because they take out 50% of the decision making. They just buy, right? If you were to play poker, you are making your decision on am I not going to play these two cards and hold them. And if you decide to play these two cards, you take them all the way to the mat, right? All the way to the river, no matter what, and see what happens. Well, I don't like that personally, but there are people this is very attractive to, and here's why. Because mathematically, if you keep buying things, you are getting richer over time. And some of those things will go to zero. Yes, United. If you buy United Airlines, if you buy any airline now, your stock is going to zero, right? It takes a crisis or whatever happens, the stock's going to zero. You know that when you buy it. So don't buy it thinking you're going to hold United forever. And people have come to me with portfolios and say, I have these old United shares. They're still saying zero, but I see United UAL, same ticker up at, whatever the stock price is. It's like, oh, they went through bankruptcy at least once by the time, and that means your shares are worth zero. The new shares are worth something. But if you're a buy and hold person, you're picking, names you love out there, and you basically hold them forever, and you are accepting the fact that it may go to zero. But you're also accepting the fact that you are not going to get moved, talked out of your long-term thesis if the stock market gets hit. If anything, you're buying on a monthly basis, so you really don't care if the market crashes. So a buy and holder was very happy last March when the market was selling off due to the pandemic because they're buying more. So that's a lifelong thing. Never sell, buy dividend stocks, and just get paid, right? You could argue from a total return perspective that they have not maximized. That's what I would say is, well, that does stunt their upper level, but a lot of people are like, I don't care. To me, 7 million and 3 million are the same as what they would say. I would say that's actually not true. There's a huge difference between those two numbers. But, if your goal is to make enough to get by and then spend it all before you pass, then yeah, buy and hold is a perfectly valid strategy. Same thing with putting all your money in the bank and never investing. If you make enough and put enough in the bank, you'll get to the finish line. It's not what I would call an optimal strategy, and I think you're choosing not to invest, but you still can get there. So I'm not saying that the buy and hold folks are wrong or anything. It's just they're not getting as far as they could had they tried to do a total return strategy. But then again, they don't have the downside either if they are not that good at investing. So anyhow, so a thought piece for the day. All right, that's what we've got. So markets hitting all-time highs. We are still across the board a little bit in the red. I do think we go green for the day because there's no reason for us to be red. So I think markets just creep higher in these situations. So with that, I'm gonna let you guys go. We'll see you all back tomorrow. You have a good one.